inflation is on the rise. It is accelerating a little bit, but that was the expectation. Now, for a while, it seemed like inflation was tamed and under control. Well, October inflation numbers are in, and they show inflation is on the rise again. But this was also the expectation. Now, in this video, we're going to discuss October's inflation numbers. We're going to talk about what they mean for the economy and also for Federal Reserve rate cuts moving forward. Now, before we get started, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. Consumer price data is in for October, and it shows an increase of 0.2%, taking the annual or the 12-month numbers to 2.6%. Now, core inflation is also up as well. It is up to 0.3% for the month, taking the 12-month numbers to 3.3%. So inflation is on the rise. It is accelerating a little bit, but that was the expectation. Now, analysts did predict for these numbers to be exactly where they were, so this wasn't necessarily a surprise by any means, but we are up over that Federal Reserve 2% target. 12 months running, we're at about 2.6% now. After the October numbers, shelter or housing continues to be a big thing that's driving the numbers. It is one of those stubborn things. The price to own a house, or the price to even rent just shelter in general, having somewhere to stay, it's a high number. It continues to go up, and at this point we have to just kind of understand that the numbers aren't really going to go down. We're not anywhere near that type of activity taking place. So for those people that are sitting on the sideline and have been saying for a while that I'm just going to wait on house prices to come down before I go in and start to look again, well, we might have to understand that day might not come. With those low house prices, the '08 crash where you could get a house for so cheap and things of that nature, we might not see something like that take place in our lifetime, or at least anytime soon. Shelter prices, housing, and rent continues to increase, and it's a big driver in the inflation numbers. Energy costs were flat, and food costs were up by 0.2% on the month and 4.9% on the year for energy and 2.1% on the year for food. Now, inflation isn't going crazy high. It's not out of control, back up to 10% or anything like that. But in the month of October, inflation did increase quite a bit. It is moving up. It is starting to accelerate again. Now, it is not expected for these inflation increases to deter the Fed from their rate cutting course that they are on. These numbers were expected. They're pretty much in line with what everybody thought the October numbers would be, and it is still expected for the Federal Reserve to cut interest rates again at their December meeting. It's pretty much priced in the markets. It's penciled in that they'll do another quarter rate cut just like they did in November. So basically, they've done 0.75% for the year so far. In December, if they do a 0.25%, that'll be a whole percentage point for the year. That much it's almost a given. You already have Fed members that are talking about doing exactly this. Certain people have come out and said, unless inflation does something out of control, there is going to be another 0.25% rate cut. Now, inflation is up, but it's not that out of control number. So we could pretty much pencil it in that they're going to do that rate cut. But after December, that is when rate cuts start to become more of a mystery. We don't know what the Fed will do starting next year. Now, markets have already kind of priced in that in 2025 you might see less rate cuts take place than the current path that we are on right now, and there's been a lot of talks that they might pause in January. So after the December rate cut, you might get the Fed to just not cut in January and just kind of see where things are after that percentage point is off of the table, start to see how the economic data comes in, and they might pause for a little while before they continue their rate cutting cycle. And I personally think that that is exactly what they're going to do. If I was a betting man and I had to bet on what the Federal Reserve was going to do, I would assume that it's going to be exactly that. December, you're going to see another rate cut, and that percentage point in 2024, just kind of ride that wave, if you will. Let that start to show up in the data. Start of 2025, not see any rate cuts, and then depending on how that activity comes in early in the year, then continue the rate cutting cycle, or depending on what the data is, might go a different direction. But I think that in January they will pause for a little bit, and they won't pick up for a month or so, or maybe even longer, depending on what the economic activity is. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this, and hit that thumbs up button for me.